Hello and welcome everybody. I'm Stephen and I'm a popular investor on eToro. Thanks very much for listening to this video today, and don't forget to please like this video and subscribe to my channel. That will be really awesome. So thanks very much, guys. So today I'm going to be doing my usual presentation. I'm just going to explain really what happened in the markets last week and then explain more about my strategy overall. And again, last week was a difficult week overall for the market. So the markets were down quite significantly. So the Nasdaq was down about 2.6% for last week, and the S&P 500 was down about 1.2%. The FTSE 100 was up slightly, and that is because a lot of UK-based companies are denominated in US dollars. So obviously, there was strength of the US dollar against the UK pound. Our portfolio was down about 4.5% last week, and that was down to a number of different reasons. So one of those, obviously, it was a poor week for the US, European and the Chinese stock markets. And in particular, which made my portfolio underperform last week, was it was a poor week for crypto. We'd had a lot of momentum over the last kind of month or so as we hit those bottoms and then started to rise up. And last week, there started to be a momentum stalling in crypto, and I'll go into that a bit later in the crypto section. But I think a lot of that is to do with a lot of assets being risk off at the moment, and that is because they're expected to continue to increase interest rates to 0.75 before there had been talk that it could go down to 0.5% increase in the next FOMC meeting. However, that is looking very unlikely now. I did a lot of short-term trades last week in order to try and quell some of that volatility that there were in the markets, and I took a lot of short-term trades, both long and short. And I did short-term trades in oil, natural gas, carbon emissions, heating oil, Just Eat Takeaway, Poshmark, Global E Online, 𝘃𝗶𝗱𝗲𝗄 City, and that is just to name a few. So I did a lot of trades last week, which those were all profitable. I did have one losing trade last week in Bed Bath and Beyond, and that is because I got caught in a short squeeze. But we can't win every single trade that we participate in, and my strategy on the short-term trades is to have a high percentage winning ratio, and to ensure I do those very frequently in order to stay profitable, and occasionally we will get the odd loss. I also closed out a long-term position in Group 1 Automotive, and I closed that quite close to highs. This was a position that I took in about 2020 or early 2021, and that is because I saw that I thought inflation was going to increase quite rapidly. There was a lot of supply chain issues out there, which caused a shortage of semiconductor chips, which ensured that secondhand cars really increased in value, which was, overall very good for the company. And I made a lot of profit on that. I think I had one position that closed at about 55% and the other position closed at about 25%. But it is continually my strategy to try to sell into strength at a big profit. And I do still think that inflation is starting to peak, if it hasn't peaked already, and some of those supply chain bottlenecks that were in place before are not so prominent as they were. So I thought it was a good time to close out that position and look at other theses. So the main news from last week, as I mentioned, there is strong indications and strong statements from the Fed that they should continue to increase rates, and that although they have increased rates over the last FOMC meeting, it's not extremely clear yet that inflation has peaked and it will start to come down. And they still think that they need to continue to increase rates to be sure that inflation doesn't get out of control. There's strong support by lots of people in the Federal Reserve, such as Lyle Brainard, who's the deputy head of the Federal Reserve, who is showing really strong support to raise the net interest rate hike by 0.75% rather than the 0.5% or 50 basis points rate hike that had previously been speculated on. However, there was some quite good data last week that was released in the US, and it showed that retail sales rose by 0.7% in July in the US. And although some of that was to do with obviously inflation and the revenue of retail sales has gone up, if we adjust that on a inflation adjusted ratio, we will see that that's at about 0.3% rise in July. So a steady rise. We also saw that unemployment was lower, and it was the jobless rate claims were lower than were expected. So we still see a very strong, vibrant employment market out there. As I mentioned, the strong pound, it helped the UK indexes last week, and so the UK indices were up slightly if we compare that to its European compatriots. And again, that is because a lot of UK companies are denominated in dollars because they do a lot of work in the US, and which helped the UK indices last week. We also saw UK inflation rate hit 10.1% in July, and that is the highest that it's been since 1982. However, if we look at that, so inflation's up 10.1%. However, if we look at wage growth throughout the last quarter, we're looking at about 4.7%. So again, there's a big disparity between the actual real inflation rate and the wages growth in the UK, which obviously that discrepancy is going to have an effect on household wallets, and they're going to have less money to spend, etc. We also, if we look at the Eurozone inflation, the outlook has not significantly improved despite the rate hikes. And we've seen inflation hit 8.9% in July. And although there has been continued interest rate hikes in the Eurozone, it's looking like they're going to have to continue those to try and get hold on inflation. Just in general, in Europe, I'm expecting inflation to actually peak much later than it will in the US. And I think the US will be very well ahead in that regard, and it depends how quickly they increase interest rates and by what amounts, but I'm expecting the US to peak before Europe, and that could be somewhere between 6 to 12 months after. Also in China, the markets were down last week as well, and that is because there has been increased COVID cases, over 18,000 cases, which really affected the Chinese markets. There's also been droughts in China and very hot weather, and this has caused some issues for Chinese farmers and for food imports and exports. We also saw it was announced by China that it has lowered its one-year medium-term lending facility to 2.75% from 2.85%. Again, a lot of this to do is within the slowdowns within China over the last kind of 12 to 18 months, and the government is really trying to support businesses. As we move on to the top 3 performing stocks for last week, and the top performing stock in our portfolio last week was Innovative Industrial Properties, and that was up by about 3.75%. The second best performing stock in our portfolio last week was Leidos Holdings, which was up about 2.52%. And the third best performing stock in our portfolio was Hormel Foods, and that was up about 2.3% last week. And the stocks that tended to do well last week were those kind of more defensive positions, as kind of growth and high beta stocks got crushed. So I just wanted to continue with my death by chart series. And if we look at the chart to the left, we're going to be talking about the housing industry in the US and the housing market. And if we look at the median sales price, we can see that is at about plus 8.2% year over year. And it's much higher, obviously, than it was in 2021. So we're looking at a median house price of about $379,000 in the US. However, that is starting to drop off slightly, and it looks like some of the froth around the housing industry in the US and has started to slow down. The chart to the right, we will see that this is the 4-week rolling average share of homes for sale, which have had price drops over the last 4 weeks. And as you can see, that is at a high of about 7.8%. So that shows that there has started to be some price drops on the housing listings that have been taking place. So we could see a kind of tapering off or a lowering of house prices over the next 6 to 12 months in the US. If we also look at the volatility index, last week, the volatility index finished for the first close below 20 since April. Usually, but not always the case, we usually see that when the volatility index does drop below 20, you do often see that kind of marks the bottom of the bear market in stocks. And we've seen many examples, as you can see to the right chart of that, where it's happened, where after it has dropped below 20, we have started to see some rises again. So I think the big question on everybody's lips is this just a dead cat bounce, or is the bottom kind of finally in, and this is just a common pullback as we start to continue to recover from the bear market that we have just experienced? And I think the short answer for that is it's a little bit early to tell. I think a lot is going to depend on how the Federal Reserve and how quickly they increase rates and to what levels. Also, that some of the corporate earnings are going to have a big factor on that policy as well. I do tend to think that the worst is probably over. But I do think that especially in the US, they're going to continue to increase those interest rates, especially over the next few months. But then I think that they may start to consider reversing the policy. Okay, so as we move on to crypto now, so I'm going to be giving you my crypto news and views. And Bitcoin had a very bad week this week, and it slumped to 21K, but it's actually holding up pretty well, and it's really held on to that 20,000 key psychological area. And I think Bitcoin really has been in this kind of ranging pattern for quite a while. We saw the lows at about 17,000. I do expect it to stay above those lows. And I do think those lows will probably be the bear market cycle lows, but we need to continue to look at the data. But just in generally, Bitcoin is acting like obviously like a risk on asset, just like a growth stock at the moment. And when we go into kind of a risk off type of environment, this does affect the price of Bitcoin. But as long as nothing really drastic is done by the Federal Reserve and inflation does start to slow down or at least peak, I think we should be okay for to stay above that 20 level. We've also saw the Ethereum merge is approaching on the 15th of September, but there's a lot of talks about potentially different forks that might be happening because of that. There's a lot of Ethereum miners that have invested a lot of money in mining equipment, and we are expecting to see at least several different forks come from that, and for many of those forks to stay on proof of work. In South Korea as well, they have also stated that crypto airdrops are going to be taxed by up to 50%, and we've seen quite a stringent clampdown in South Korea on crypto regulations in general, as they try to make it as clear as possible, and especially because of what happened with Luna. And obviously, as a South Korean founder, and lots of South Korean people got hurt by that, they are taking a much bigger focus now on crypto, and airdrops will be the first things that they make sure that they tax. We've also seen crypto lender Hormel, which is based in Singapore. This is facing a nearly 200 million financial shortfall. So just a few weeks ago, or just over a month ago, Hormel had stopped the withdrawal of funds by customers, and now in a recent audit report, it's saying that there's nearly $200 million missing, and that cannot be accounted for, and these are lost funds for customers. So this is another really difficult example of some of these crypto lenders struggling. There's also been some issues with the Vassal testnet launch for Cardano. There has been several bugs that were found in the code, which have been worked through by some new released updates and patches. However, this has been fraught with problems, and there has been a lot of negative sentiment and speculation about what's happening with Cardano. However, Charles Hoskinson has jumped in and said that he doesn't expect a problem with it long term, and that's really what testnets are for, is to find these potential bugs. The other thing was that Galaxy Digital, which is run by Mike Novogratz, has called off the tie with BitGo, but BitGo intends to take legal action against Galaxy Digital, which it says it was an improper decision to terminate the merger agreement that they had between the two parties. So there's a lot of back and forth between Galaxy Digital and BitGo, and it'll be very interesting to see how that one settles. If we look now at the Bitcoin charts, as one of the things I just wanted to point out on the bottom chart here is that miners who have been in pain over the last kind of few months or so, and there has been a big slump in the profitability of miners. As you can see there, we have started to look like we may have hit a bottom there, and miners are starting to sell off a lot less Bitcoin from their reserves. And as I mentioned, I expect over this Bitcoin bear market to see a lot of Bitcoin miners consolidating overall, and usually the capitulation of miners, so when some miners go out of business or they really struggle, we see some of these and usually when we see the capitulation of miners and we see a lot of kind of miners go out of business or have to sell large amounts of their Bitcoin, this usually marks the bottom of the cycle, as they are usually the last people to sell, as they have to really to keep their business afloat and survive. So again, I think a lot of things are still pointing to the fact that 17,000 could have been the low, but we will continue to look at some of these on-chain metrics. Thank you very much for listening to this video today. And as usual, don't forget to please join my Discord group if you haven't already. We have a really awesome, amazing community of people where we're constantly talking about what's happening in the markets. And it's just a hell of a lot of fun. So please join there and have a great week ahead. And I will come to you with another update next week.